So is the U.S. sanctioning Gazprom Bank the nail in Russia's economic coffin, so to speak? Now, it took the United States nearly 3 years after Russia's full-scale invasion of Ukraine to finally sanction Gazprom Bank, which is Russia's third largest bank, but it is also the largest bank in foreign asset movement because of its dealings in the energy sector. And these sanctions have taken a toll on Russia's economy over the past few days, with precipitous drops in the ruble's value and the Moscow exchange. Now, The Economist is saying, quote, if panic occurs now, and it can happen simply due to fear among the Russian population, say through social media rumors, everything could collapse in a matter of days. The Russian economy is indeed on the brink of collapse and disintegration, despite all this talk about resiliency. And yes, many economists predicted the collapse of the Russian economy back in 2022, and they were wrong in their estimates of speed, but they weren't wrong that it was going to happen. And this mainly was because everyone underestimated the level to which Russia prepared for the war in the economic sense. And credit must be given to the Russian central bank for their knowledge and agility in reacting to the sanctions previously. However, economic indicators are still taking their toll, and the Russian economy is now faltering. Many economic markers, such as GDP growth and inflation, are being manipulated by the Kremlin to show that they are better than they really are, and much of the GDP growth is in wartime material, which isn't a good marker for determining if your economy is healthy, because that wartime material generally gets built, sent to the front line, and used or destroyed. And even if it's not, those items are no good in an economy in the future. What good does a tank do for the economy after the war? And there are concerns about where the ruble is sitting. Back last year, when the ruble crossed the 100 mark, meaning 100 rubles per dollar, a lot of economists in Putin's regime were concerned. Some even publicly stated that this was bad. This was when the Kremlin moved interest rates to maintain the ruble somewhere at 88 to 92 per dollar, and that's where it held until recently. Well, now it's over 100 again, and it even crossed into 114 earlier yesterday, which is the lowest since the war started. And it seems that Russia no longer has the economic levers to pull to control the drops unless they just do full stops on major areas of their economy. Now, the dollar exchange rate is perhaps the simplest indicator to focus on right now. If they can't control the ruble's free fall, things are likely to get very bad. And if the dollar appreciates by 20% against the ruble, a new round of inflation will be expected. Currently, Russia's inflation sits at 8.5%. For context, the U.S. sits about 2.6%. And the interest rate is currently an eye-watering 21% in Russia. The U.S. Fed interest rate is 4.5 to 4.75%. And some Russian economists are saying to stabilize the Russian economy, they may need to push the interest rates to an insane 30%. So because of this, if there is a panic in Russia, there will be a collapse of everything, worse than what happened in 1998. The government understands this risk in Russia, and they're making statements to try to counter this panic. They're saying things like the dollar exchange rate is not important and interest rates are just a number and nothing to worry about. Well, that's just flat out incorrect. A depreciating ruble increased the costs of imported goods, leading to higher prices for consumers. This situation contributes to inflation, eroding purchasing power and making everyday necessities more expensive for the average Russian citizen. And the ruble is hitting its lowest levels against other currencies as well, not just the dollar. This isn't just some pipeline or bubble that the US dollar versus the ruble so we can kind of beat our chest. Where it really matters is the Chinese yuan, where the ruble is hitting its lowest levels against that currency. And given that Russia relies on China for trade, that is very bad for Russia. Now, you'd think the low ruble would mean good news for exports. Well, sort of. The problem is the Kremlin is combating the low ruble with high interest rates. And when you have high interest rates, companies face higher costs for financing operations and expansion, which can lead to reduced investment, slower growth, and potential layoffs. Sergei Chemezov, who is the head of Russia's state industrial conglomerate Rostec, said Tuesday that high interest rates in Russia are making export contracts unprofitable, warning of production slowdowns and bankruptcy risks. Rostec is one of many Russian industrial companies that is complaining about prohibitively high interest rates in recent months. Chemezov went on to say, quote, with such a key interest rate, of course it's just madness. Any export contract becomes unprofitable for us, end quote. He also said that exports for products with long production periods in areas like aviation, air defense, and shipbuilding may have to be stopped entirely because they just can't make any money on them due to the interest rate. High interest rates also impact the Moscow exchange, as the stock market has fallen 20% in Russia because investors see better returns in the 21% interest rate from deposits rather than stocks. Furthermore, the Russian central bank just shut down their foreign exchange market for the rest of the year. So it's too late at this point for people to convert their rubles into foreign currencies that are more stable. Next up, we may see restrictions in ruble purchases of things like gold and other precious metals, as well as possibly diamonds and other commodities. Now, while the Kremlin may downplay the significance of exchange and interest rates, these indicators are vital to economic stability and directly affect the well-being of Russian citizens. Ignoring or minimizing their importance will lead to problems because they're just not going to address the underlying economic issues, which we all know is the war in Ukraine. And this is going to result in more severe financial crises. The combination of a weakening ruble and high interest rates signals that the Russian economy, as of right now, is very, very sick.